G'day everyone, welcome back to Pete's Investing. Today's July 14, 2023. This is a British pound US dollar currency update on our weekly bullish mode, on our daily bullish on our oscillator. But just notice we're developing a minor resistance up here, and I'll talk about that on the in a minute or two. So first off, on the weekly, our oscillator here is broken up through the zero, and it's been in a nice bullish mode for a number of months now. But notice as well, since our previous video, it stopped at the 61% Fibonacci level, and that's always a key level. We had almost like a triple 3 weeks, almost bouncing off that 61%. This week it's finally broken through there to the upside, so we may see further advancements for the British pound compared to the US. You can see there our oscillator is doing quite nicely as well. So we'll keep an eye on that. There's no real divergence to talk about on the weekly. On the daily, likewise, we've got these support resistance lines we drew some time ago, and it's broken through that resistance line at 128.42, and it's now hitting this new minor resistance so far at 131.41. So again, no real divergence to talk about. The oscillator is in a bullish mode. That's good. So we'll see if that's going to be potentially a bit of a downturn from there. On the hourly, you can see there it's more closely, it's reached this resistance, and it's got a double top, and in the last couple of hours now it's giving a bit of a pullback possibly. Now in our last video we did draw this projected bearish divergence on the CCI versus the price, and since then things have changed. So the divergence is still in play, and why we say that is because you can see that if I pull it out to that level, still a bearish divergence versus, do we do that again? Versus the price. It's not going to work. Hang on, let me just. I always love it when it just draw a new one. Let's go up to that level. Okay, obviously that's a bullish divergence on the price versus bearish on the CCI. So assuming it turns down from here, a couple of things are going to happen. It's going to confirm that as a major resistance area, and I'll remove that red line there. But also we're going to start planning for a potential entry level. So let's assuming it starts turning down. I'm going to assume an entry level somewhere below this channel there, and go back to this key low to that high, and we'll set a target. Let's go, yep, that's low enough, so we'll set a target. Now it depends where it comes down. It could come down up here, or if it has a pretty dramatic drop, it might come down somewhere here. So let's put a target at that level there, at the 38% level. So it depends where it comes down. That'll be our target area for a reversal. We always pick the closest Fibonacci level below our entry. So again, it depends where you don't want to get in too early. You want to confirm a breakout of this channel. And that's why I say wait for a breakout before we enter. And the target, look, it doesn't have to be there. You can bring, if you're really careful, cautious, you could probably put a target a bit closer to the entry. I prefer to be near the closest Fibonacci level. That's a high probability of success, rather than getting too ambitious with any longer range targets. So that's the something to watch out for on the divergence. Otherwise, if it breaks above this resistance, it's forming, that'll invalidate that, and it'll create new resistance higher up than that. The weekly and daily are showing more bullish momentum, so primarily take bullish trades. But again, just be careful, we've got a bearish divergence here, which indicates a potential downturn at any time. For this to be invalidated, we need to see the CCI rise higher than that point there. So to understand this and other trading strategies, feel free to subscribe and donate to the Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscription in the description below. Thanks for watching, and see you in a future video.